Hello everyone, hope everyone is doing well. In today's video, I would like us to redo and backtest Fibonacci retracement method of our trading that I taught you guys on this very channel. I'm just going to attach the video in the top right corner. Make sure you check it. I went into it in detail, but we didn't do enough practice on it. So people have been asking, they still have confusions on it. So in this video, to make it just short and for you to understand the concept straight, first watch the other video, or you can watch this one, then after you go and watch this one, the other first one, because the other ones have most of the rules. This one is just a reminder and back testing. So we're going to use EURUSD since the most traded one by most of you, right? We're going to back test the whole of this move up to where it is currently, and how, because last week we did a breakdown and we said that we're expecting it to drop, how we came up with that in case you to use the Fibonacci retracement tool, right? So let's first remind ourselves of the rules. Now, one, we use the points that we use 0.382, or what you can call 38.2. Then we also have 0.5, or that's the 50%. We have 0.618, that's the golden ratio. And then also we have 0.782. So this, if you're plotting or making your settings on the fib, this is what I mean. These are the levels that we expect you to have: 0.382, 0.5, 0.618, and 0.716. This is what we taught in the previous video, right? So these are make sure you double click. For example, if this is your fib like this, double click on it so that you can go to the settings like this, so that you can have them, right? Then you click OK, right? That's all that you need. So let me just clear this. So after inputting that, now how do we draw the Fibonacci retracement level? I know there are very many ways of people drawing them. People draw them from where the move started to where it ended. But remember in the previous video, which I'm repeating right now, that for us, we're only interested, one, the market has to be trending, and then two, it must be an impulse. For something to be an impulse, it must be breaking several turning points, not just one. When the market breaks only one turning point, it means not an impulse, right? For example, if the market just breaks this turning point and then makes a low, this is not, it can be an impulse, but this is just one turning point that we expect the market to come back to and retest, right? If they ain't retested, they mean that it is an impulse. It will come back and retest later. An example is here. You can see the market broke this low. And then when you extend to the right, you see the market came back and retested and reacted aggressively. So this is just a normal market movement of the market making lower low, lower high, lower low, lower high, lower low, lower high, lower low. So we expected the lower high to be created, which the market later broke. So we need the market that is breaking more than one turning point so that we can consider that as an impulse, right? So just allow me to replay because we are back testing. So I'm just going to start from down here where the market, let's just start from here in this move here, this move up and then also down so that we can have enough understanding. So one, we need the market that is trending. That is one. Then we need an impulsive market. I've just described what an impulsive market is. And then the next step is we need an opposite candle to come into the market. So for example, if a sell candle comes in when this is an aggressive buy, an aggressive market or impulsive buy is the same thing. You can see this is an impulsive buy breaking this turning point, this one. Okay, these two here is this almost at the same level. So we broke this level, right? This level and this level. So making this an impulse. So when that move comes in, how do you draw a Fibonacci? Draw it from the tail here where the move started to where you're seeing this candle coming in here, the tip there, like that. So remember, you're going to mark the 38, mark the 50, and then mark the 61. You can also mark 78, though 78 that's not the use. I'll speak about it later. I want us to backtest what we spoke about in the other video. So remember, I'm just going to turn this one to red. This is the golden ratio. The market or price should not break it. So the price can come and touch in here. These are our areas of interest. This. The market can play around here as long as they don't break the golden ratio, right? So let's see what the market did. You can see it came and touched here. Now, the moment it touches into your area of interest, switch to your area of entry. To your entry area. I like using H4 to mark my levels. You can see the market failed to break this low here. So there's a possibility we could be continuing above. So what am I interested in? I'm interested in the price going above this area here. I'll just mark this blue. So since we have marked our impulsive level in daily, meaning my entry time frame is H1. So the moment we break above there, I'll be going long. So let's see. Not yet a clean break. So this is the market broke above here, right? So if you're a high risk taker, of course we expect some small retest, but a retracement inside there. We have some levels that are not tested, so we shall use that for a stop loss. So I'll just take the trade here. So like we have an area here, there's this area, there's this area, there's this area. So to be safe, my stop loss has to just be below this area so that the market then come and take me out. Let me just help myself by marking it. This area here, my stop loss to be below this area. So there. So let's see what the price does, and then you can see what we do. So this is your first target, and then it's done. We are targeting. When you go back to the H4, we also have another high here. Let me just go back. This is the first high. When it breaks above this high, we have this strong area here, actually around. Let me just go to line chart so that I can get the closure of price. This one here. So this closure of price, and then the next one could be this one, this closure of price here. You can also see the same levels in daily time frame. It is easier to get them in a daily time frame, but just like to. So let me just go back to our time frame that we're using for entry. So if the market kicks us out here, let me just target here. Then we can re-enter again, because we know that at daily time frame we have an impulse that the market is correcting in a week. This is a weak momentum. So let's first target this one, then we can see what the price does next, right? So market went against, I think this was news here. So, and then this one was taken out. It aggressively went and even hit the second target. So this could be a possible impulse also when you go to daily. So when you come to daily also, you can see it shows you that this is an impulse. But what is key is I want you to observe that the market has broken the previous lower low, which now became a resistance. Now it became support. So plus impulse, correction, and another impulse. So this is the impulse we have traded. If the market can give us a retracement here, then we want to observe another impulse, right? Because I want us to backtest the whole move. So we have traded that move, this one here. So let's see if the market can give us another impulse. So the market did what? The market came higher high, higher low, higher high. So now currently we are breaking below here. If it can break below this point, because this is the first turning point we broke, instead of retesting, it just broke. So if it breaks again down there, we shall be having another impulse to the sell side. Then we use the same rules again, right? So you can see we have broken below, meaning there's a small change of trend there. So at the moment a buy candle comes in like here, what are we going to bring your fib? Now in the sell, we're drawing it from where the sell started up to where this buy candle came in from down here. Now recall the rules. The rules are, let me just delete these targets, right? Recall the rules, please. The rules are, we want this area to be tested. We also want this one could be tested. And as long as this one is not broken, so I'll just turn it to red. The golden ratio, as long as it's not broken. And then where's the target that I'm interested in? I'll be interested in which area is not properly tested here. So I do have this area that the market broke but never came back to test it. So I'm just going to target this. That is one. Then the second area that the market could be interested in is this same area here. So you could be targeting these blue levels, right? Not tested. Also, the market came here, tested it 2 times, but we have an improper retest, so the market could come back and test it. So we know that we want the market to come back and touch here. So let's see what the price does. Price tested this level here. It has not gone back into our fib areas. So let's see. So the market comes back into our fib areas. Now what do? You go to observe change of trend. So I'll observe here change of trend. Because right now this is a very strong bullish market. Now, we are seeing that the market is continuing higher, meaning that if the market breaks, remember the rule is if the market breaks above the 61, it's not valid for us to take a sell, right? And you can see in H4, we fail to observe to get change of trend. Most of you just trade by taking a trade. When the moment touches here and you see a pin bar, you start taking sales. This is not a change of trend. So you can clearly see this one would have been a loss, right? In case you trade like that. So there's no change of trend, meaning that this impulse wasn't valid, right? It did not correct. So currently, the market went and created. It failed to take out this high here that gave us this retest to this area. So let's see if the market continues above. So the market breaks above. Now, what is interesting is here. The market came after testing this level here. It broke above this impulse. Remember, these are the areas that we had of interest. So the market came and retested it and continued. So you could have just traded this as a break. It has changed trend instead of selling. You can just wait for it to retest this area because we want, remember, at first was our resistance, right? Then we expected a sell, but instead the market went and broke aggressively. So when a resistance is broken, what does it become? It becomes support. So it retested it as support and then went. But your target should always first be this one here. But now remember, since we're using just Fib, I've not backtested in depth about how I would have taken this buy here because my focus was on the sell. So I wouldn't also take this trade. Now we're again above this point here. So we expect the market in a normal way. This is not an impulse because we have just broken one turning point, right? So we expect the market as usual to retest here, either give us a lower high break below or to continue higher. So let's see which one the market did because we're interested in an impulse only. The market again broke it down, right? So let's see. The market broke two turning points, making this an impulse, right? It broke this turning point and also closed below this turning point, this one here. So this is another sell impulse that we have. So I'm just going to bring my Fib from where the sell started, right, up to down here. So I expect the market to come here as long as the golden ratio is not broken. So let's first wait for the market to come in our Fib. So it came and touched in our Fib. Now recall the levels that we are targeting. We're targeting this level here, but it was tested. So this one, I'll change it to green. It was tested. Now we have one blue not tested. And also we have a level just slightly below here that was not tested. This area here was not tested. So we expect this level to be tested. Let me just make it blue. So our target is going to be this blue, not this one here. Just delete this to avoid confusion. So when we have a change of trend here, please don't trade without change of trend. When we get a change of trend here, since now it has not touched our Fib, as long as it break golden ratio, we're expecting a sell. So let's go to H4. So we observe change of trend. You see the market is failing to take out this resistance area here, this area. And also the market came tested this level, but there's another level that was not tested. So there's a high possibility we may actually come back into this area with a strong test. So let's see. With a strong push up, let's see. Not yet. So if you're a high risk trader, we have this one here. 1, 2, 3 with this grab of liquidity you could take here, but I expect the market to come back here for us to take a very clean entry. Let me just first put here. I expect it to come back, and because we have one level that the market came and tested with this week, and also we have this other level that the market has tested. So this consolidation here, there's this level that the market broke. This one here was the proper test, you can see here. But this one here, the market came and tested it. So there's this one we expect also the market to come back and test it. Let's just try to extend if this was the test. Sorry about that. There are two types of entries. That's why I want to show you both of them. The high risk one. Let's check if it tested it. This one here. Actually, it tapped into it. So this is the entry. I thought it didn't touch. So this is you take your entry here, and your stop loss is just above this area here. So this is not a proper risk-reward ratio that I would take. I normally like trading 1 to 3. So let's see how it plays out. The market came back and almost took us out, but the reason why it was coming back is this area here, these turning points. You see this turning point, because from here, the market after testing it created this consolidation here. Some of you could call it like there was a pattern. So the market had, after breaking these double bottoms here, the market had to test this low, test this low. So with this test, I thought I tested this and also this. The market came and tested. Okay, sometimes it will happen in the market. The market makers, of course, are looking for liquidity. So let's see. If it takes us out, we look for the sell because this is an impulse correction. We expect it to continue down. So let's see what price does. So the market dropped. Let's see if it reaches target. The market dropped down. It hit our target here. So currently, this is where Euro USD is. And remember, this is our blue level. Now, if the market closes below this level, this is now a current price. This is a current price, and you can use it also as your analysis. The market closes below this analysis, this part on the retest. If it gives us an impulse, you know what to do now. Draw it from up to down, because we're in a downtrend, lower low, lower high. We're making lower lows and lower highs. Let it close below. On the retest, can give us an impulse. or if you trade just break and retest, it's okay. It's the same thing. As a trader, those are basics that you must know. So from there, the blue level that we did not target, or so we did not test also, we had this area here that the market most likely could come back to. But of course, we have a threat here along the way that the market first tested. Yeah, should be your first target. So on a strong break, weekly test, we expect something like this. It breaks here, something like this. If it fails, still observe change of trend. We have showed you guys how to manage all that. I hope you guys can actually utilize that. I hope this has answered those people who were asking about backtesting on Fibonacci retracement tool, how we use it. This is how we use it. We don't use it like how most people use it. I hope it can help you. Please, the way I'm showing you, it seems easy, but it's not easy, right? Why is it not easy? Because it requires you to practice. It requires you to backtest. It is not easy like the way you're saying. It is easy for me because I have mastered my rules, the same rules that I'm giving to you, right? So I would like to request for your support in case you've gotten value out of this video. Make sure you like and subscribe so that many people can also come across it. Have a great time.